Converting your Florida corporation to an LLC could save you from double taxation while maintaining business continuity. This streamlined process allows you to change your business structure without dissolving your company. Florida law permits businesses to convert from a corporation to a limited liability company through a statutory conversion process. This means your business can change its legal structure while preserving its existing relationships, contracts, and assets. The primary motivation for many business owners to make this change is tax efficiency. Corporations face double taxation. Profits are taxed at the corporate level, and again when distributed to shareholders. LLCs, however, typically enjoy pass-through taxation, where profits are only taxed once on the owner's personal returns. To file a conversion in Florida, you'll work with the Florida Department of State's Division of Corporations. The process applies to both domestic and foreign corporations operating in Florida. The basic conversion filing fee is $35, plus any applicable fees for the new entity filing. Before submitting official paperwork, you must create a plan of conversion. This document serves as the roadmap for your transition and requires approval from your corporation's shareholders. The plan should include your corporation's current name and the name of your new LLC, how corporate shares will convert to LLC membership interests, and confirmation that the conversion complies with Florida law and your corporate governance documents. While you don't submit this plan to the state, you must keep it in your corporate records for compliance purposes. The conversion process follows several key steps. First, verify that Florida allows your specific type of entity conversion, which it does for corporation to LLC transitions. Next, hold a formal vote among shareholders to approve the conversion according to your corporate bylaws or articles of incorporation. Once approved, obtain the Certificate of Conversion form from the Florida Department of State. Complete this form with details including your corporation's name, registered agent information, management structure of the new LLC, and the LLC's name and registered agent. You'll also need to prepare articles of organization for your new LLC. Submit both the Certificate of Conversion and articles of organization together with the appropriate filing fees. Florida supports statutory conversion, which is the simplest method available. However, it's worth understanding all three conversion approaches used across different states. Statutory conversion is a direct transformation where the business files conversion documents and becomes an LLC while maintaining legal continuity. Statutory merger involves creating a new LLC and merging the corporation into it. This method is used when direct conversion isn't available. Non-statutory conversion is the most complex approach, requiring formal liquidation of the corporation and creation of a completely new LLC with manual transfer of all assets and liabilities. After your conversion is approved, several important steps remain. Update all business licenses and permits with local and state agencies. Revise existing contracts and agreements to reflect your new LLC status. Update your banking information with financial institutions. Notify the IRS of your entity change, which may require applying for a new employer identification number depending on your situation. Though not legally required in Florida, drafting an operating agreement for your new LLC is highly recommended to establish clear roles and procedures. The tax implications of conversion deserve careful consideration. For C corporations, conversion is generally treated as a liquidation for tax purposes. This means the corporation may be taxed on the deemed sale of assets, and shareholders may face taxation on asset distribution. This potential double tax hit makes professional tax planning essential. S corporations typically face fewer tax complications since they already have pass-through taxation, but there could still be tax consequences if the business holds appreciated assets. The IRS may view the transaction as a liquidation followed by contribution of assets to a new entity. Working with a tax professional can help structure the conversion to minimize tax impact. Converting from a corporation to an LLC in Florida offers significant advantages when done correctly. The statutory conversion process preserves business continuity while potentially providing tax benefits and operational flexibility. However, the complexity of tax implications and legal requirements makes professional guidance invaluable. Remember that Florida allows this conversion without dissolving your business. Existing contracts typically remain valid, and with proper planning, you can minimize disruption while maximizing the benefits of your new LLC structure.